My big idea this year is Alpha Bank in Greece. It's a $3 billion market cap company. It's a well-capitalized bank in what is now an oligopoly market in Greece, trading at 0.3 times book. Now, we think the shares could double over the next few years.
You know, it's interesting, Aaron, hold on. It's interesting because the other day, at the end of the show, we did this RBI thing, and we pointed out the best performing stock market in the world this year is Greece. Is this a bet on the nation in general, or is this an individual story, Aaron?
It's an individual story, but it hinges a lot on the recovery of Greece as well. And really, the way I like to think about Alpha Bank is you have a bank that's trading at an extremely low valuation today, 0.3 times tangible book and 2 times pre-provision profits. And what you talked about, the macro in Greece being a headwind for the past 10 plus years, is now finally a tailwind. So Greece and Alpha Bank can benefit from Alpha Bank starting to shed a lot of their non-profitable NPEs off their bank and then re-rate to what is a normal valuation for a healthy bank.
What's the risk? Because as we know, Aaron, and I'm sure you know, Greece over the last 10 to 15 years has had its issues, and it tends to go from boom or bust rather quickly. What is your risk profile on Alpha Bank?
Sure. We've been involved in Greece off and on since the 2012 restructuring. In 2012, I remember a lot of people asking about what the risks were, and we felt that they were very appropriately priced in and more to the sovereign bonds. Now we're seeing a similar type of asymmetry with Alpha Bank in that a lot of the downside risks are already really priced in. The risk for a bank is always that they're going to need to raise capital at unattractive, dilutive levels. Now, we don't think that that's the case for Alpha Bank anymore for a few reasons. One, they've raised capital 3 times already. They've passed stress tests under very draconian assumptions when Greece was planning, potentially flirting with leaving the euro in 2015. And now they're shedding their non-performing exposures roughly at book value. So we don't think that there's much risk to the downside in terms of capital raising. They're one of the best capitalized banks in Europe now, and we think very, very little downside risk.